Right now, your digital financial life is scattered. You scroll social media on one app, split dinner bills on a second, and buy stocks on a third. Every time you switch between them, there's friction. Elon Musk originally tried to solve this exact problem in 1999 with X.com, an online bank that eventually became PayPal after he was ousted. Now, he's back to finish the job. In early 2026, Musk launched the beta for a new digital wallet called X Money. The consumer demand for early access was immense. Actor William Shatner even stepped in to leverage the hype, auctioning off 42 beta invitations for $1,000 each, directing the proceeds to charity. That enthusiasm is tied to the sheer scale of the project. By plugging a payment system directly into a network of roughly 600 million active users, Musk is trying to build a Western equivalent to dominant Asian super apps like WeChat or Alipay. This project is designed to ingest daily social engagement and automatically spit out native transaction flow, aiming to capture the entire consumer finance sector under a single interface. The timing of this beta launch is tied directly to a massive corporate event. In June 2026, SpaceX is scheduled for an initial public offering, targeting an eye-watering valuation of $1.75 trillion. Traditional IPOs normally set aside 5 to 10% of shares for everyday retail investors. SpaceX plans to allocate up to 30% of its offering globally. To capture that massive pool of individual capital, you need seamless plumbing. X Money serves as that interface, transitioning hundreds of millions of users from passive content consumers into verified financial participants. The wallet acts as a bridge. It creates an environment where social media excitement regarding the SpaceX launch can be instantly converted into actual deployed capital. We can see exactly how this friction is eliminated with a feature called Smart Cash Tags. If you type a stock ticker symbol into a post, the platform automatically generates an interactive link displaying live market pricing, charts, and related social chatter. During a pilot program in Canada, X integrated this feature directly with Wealthsimple, a major online brokerage. Users could tap a cash tag and execute a trade via a third party right there, without ever leaving the social feed. In its very first week, that Canadian pilot generated an estimated $1 billion in global trading volume. By collapsing the distance between reading a viral post and making a trade, the platform effectively monetizes sentiment-driven momentum. To get users into the ecosystem in the first place, X Money uses an incredibly aggressive bait, a deposit account advertising a 6% annual percentage yield, backed by Cross River Bank. Let's look at this chart comparing X Money's yield against the broader market. With the target federal funds rate sitting between 3.5% and 3.75%, offering 6% is economically perilous. It is a calculated loss leader meant to buy market share. By combining that massive yield with Visa Direct's instant payment rails, the platform actively encourages users to reroute their employer direct payroll deposits straight into the X ecosystem. The financial industry recognizes the danger. Mizuho Bank analysts recently downgraded PayPal stock, explicitly citing the direct substitution risk posed by X Money. PayPal's Venmo application currently has roughly 100 million active accounts. X Money is rolling out to a base of 600 million monthly active users, operating at the exact same entry points for peer-to-peer transfers. Faster, more urgent tone. By keeping all of those users and their money inside a closed-loop system, X Money allows merchants to bypass traditional e-commerce checkout buttons entirely, threatening to starve legacy payment companies of billions in merchant fees. But executing this vision requires navigating what is rapidly becoming a highly complex and deeply hostile federal regulatory landscape. In April 2026, Senator Elizabeth Warren launched a rigorous inquiry specifically targeting X Money's reliance on Cross River Bank to hold user deposits. While X needs Cross River Bank to provide FDIC insurance, the bank itself has faced FDIC enforcement actions in 2018 and 2023 for unfair, deceptive, and unsound lending practices, prompting Senator Warren to label them a repeat offender. The inquiry also leveled explosive allegations of regulatory self-dealing. During Donald Trump's administration, Musk led the Department of Government Efficiency, which systematically dismantled the Consumer Financial Protection Bureau. That specific bureau had recently finalized rules to supervise digital wallets. By actively helping to gut the agency, Musk effectively eliminated the primary federal oversight body that would have governed X Money, turning the wallet's launch into a major political flashpoint. Currently, X Money runs on traditional fiat currency. But the platform's underlying architecture is designed to eventually migrate user deposits onto highly efficient blockchain-based stablecoin rails. However, that long-term plan faces an impending massive legislative roadblock, the Digital Asset Market Clarity Act of 2026. This bipartisan bill targets non-bank crypto platforms, strictly prohibiting them from paying out passive yield simply for holding a digital token in a wallet. If X Money completes its transition to those crypto rails, the Clarity Act would immediately make its 6% annual yield illegal, stripping the platform of its most powerful tool for acquiring new customers. Elon Musk has built a digital infrastructure capable of bypassing traditional banking, but X Money's ultimate success won't be decided by how fast its software runs or whether it can beat PayPal. It will be decided by whether it can survive an aggressive legal war with the US government over the future architecture of global finance.